So, 2020, it's just around the corner. Can you believe it? That was a pretty fun decade, I guess, but here we are on the cusp of a new decade. And with that in mind, I want to take a few minutes to consider what are likely to be the top trends that are going to drive the crypto markets in the year 2020 and how those trends are likely to impact the crypto industry. And you know what? Let's just get into it. And we're going to start off with number 5. Gaming. Okay, seriously? Gaming has the ability to take crypto to the next level in a big way. And yeah, I know, some people may not see, unique in-game assets as something that's super valuable for the world. But what I look and see is an entire generation of users who are going to grow up earning and using blockchain-based crypto assets. Trading those assets for Ethereum or for Bitcoin or for stable coins, then going out and buying themselves some sweet new sneakers online, then using something like Lolly to get a Bitcoin back reward for the purchase that they just made. And then they use that Bitcoin as the reward to go out and buy more in-game assets, creating a whole crazy ecosystem of financial transactions. And look, up until now, most crypto games have been, quite frankly, pretty damn lame. But we have some seriously amazing games which have just been launched or are in the process of being launched soon. A couple of these are Gods Unchained, which is kind of like Magic the Gathering, or a game called Hearthstone, but where you have unique cards that you hold in your Ethereum wallet. All of the Gods Unchained assets live on the Ethereum blockchain. And the team at Gods Unchained have also been working hard to make the Ethereum blockchain even better. They've been doing things like coding out upgrades that have made the minting of non-fungible tokens leagues more efficient. And the game is also super fun to play, so that's a sweet bonus. Then there is Neon District, which is a cyberpunk RPG that really looks super sick. The trailer looks like something like Blade Runner meets Final Fantasy, so that's cool. All the in-game assets can, of course, be uniquely owned by you. I actually picked up some gear for this game the other day, and I'm kind of looking forward to the launch of the game to have a chance to play around with it and kind of see what this game is like. And then there is the Age of Rust, which is a large open-world game within the Engine universe, which means that the game items all have that native value locked into them via the Engine Forge. These can, of course, then be melted down, and those tokens underpinning the value of that token or item can be redeemed should you choose to do so. And then, of course, these game items can travel between games within the Engineverse, meaning that your gaming experience is, of course, richer, and that your unique items can then be carried with you across multiple gaming experiences. Now, the coins in particular to keep an eye on from the gaming industry are Engine, Cocos, Loom, and Wax, as well as Matic, which is enabling really that next level scaling for super fast, super cheap transactions. So you can have a peek at any of those coins to see what they're doing with the gaming industry. 2020 might just be a big critical year for crypto gaming, especially if any of these games can hit that viral traction and get a lot of players on board. Also, remember that all of the new generation Samsung and HTC phones are coming with built-in crypto wallets for the top blockchains like Ethereum, and that some browsers like Opera have even built-in crypto wallets as well. All of this basically enables a seamless gaming experience for users, so watch this space. Gaming is going to be big. Okay, let's move on to number 4. Number 4, which is derivatives. Bitcoin derivatives in particular. The impact of the Bitcoin derivatives market has been very significant. And there are two conversations that we have here when we talk about derivatives. One, it's the Wall Street angle, which is, of course, largely settled cash contracts. Of course, you get that one from Bakkt, which is physically settled. But a lot of attention is given to Bakkt and to the CME in the media. And, of course, you always have traders talking about needing to fill the CME gap and all that rubbish. But the volumes of the Wall Street products are considerably less than the crypto native platforms. And to be honest, screw Wall Street, man. Those guys are not here to do anything good for crypto. Quite the opposite in most cases. Personally, I'm a lot more excited about platforms like Bybit or all of the new ones we see coming out like Duedex or FTX or any of these other guys. Everyone's kind of hopping on the crypto derivatives bandwagon these days. These crypto native platforms, they trade and they settle in crypto, not in cash. And they offer the ability to, of course, long and short a wider range of coins than just Bitcoin, which is very important for liquidity in the ecosystem. There's even indexes in some cases. These platforms are available to everyone, which is important. It's not just the suit-wearing crooks on Wall Street who can access this stuff. The impact of platforms like Bybit and BitMEX has been massive in the last year. Love them or hate them, the leverage trading platforms, they are here to stay, and they are forming a massive part of the daily trading volume of the crypto economy. This trend is only going to continue to grow into 2020 as the crypto derivatives markets really just continue to be super popular and to just pop. The demand to be able to trade Bitcoin on margin to long and short Bitcoin and other cryptocurrencies is only on the increase. I just hope that most of the volume continues to flow into crypto native platforms like Bybit and others. However, Bakkt is gaining more volume all the time, so the story is far from finished. Also, I really strongly suspect that we're going to see Wall Street trying to launch some Ethereum products, probably in 2020. It is, of course, the next most likely candidate for a futures market product from Wall Street. Certainly, Wall Street's going to move beyond Bitcoin. The only question is when and with which asset. And that moves us on to number three. Number three, regulations. Yes, 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 like it or not, we are getting that regulatory clarity that so many people have been asking for. Regulation, when done right, can actually help to encourage crypto adoption and crypto use. We can look at New Zealand, for example, allowing salaries to be paid in Bitcoin. That's nice. I like that. Or basically everything that France is doing right now. Seriously, France has been kicking butt. You guys rock, France. In particular, the decision of the French Ministry of Education to start teaching high school students about cryptocurrencies in school. That's craziness. That's an example of something that where we see lawmakers doing something super positive to encourage crypto adoption. Sadly, though, a lot of regulation is not like that and falls on the side of being overly restrictive or just outright hostile to crypto. The biggest example of this, and something which is likely to be a big topic of conversation in 2020 and beyond, is the FATF travel rule, which, of course, as a reminder, forces exchanges and wallet providers to share your identity linked with your wallet address for all incoming and outgoing transactions, which is very problematic. This rule is not only a draconian piece of regulation, but it's also really a terrible fit for the cryptocurrency industry since the travel rule was initially designed for 9 to 5, Monday to Friday, banking BS. It doesn't fit with a 24/7 crypto market. This is one of the biggest regulatory attacks on the crypto industry that is currently ongoing. And the rollout, the actual implementation of the travel rule is going to start in 2020. We've also seen exchanges increasingly being pushed to delist Monero and other privacy-focused coins partially as a result of the FATF travel rule. And that's just the tip of the iceberg, of course. The potential for governments to tighten the screws enough to really stifle growth in the crypto industry, that exists. It really does. Thankfully, we have leaders like Japan and France and Switzerland and others that they're paving the way for a bright crypto future at a regulatory level. But definitely keep an eye on the regulatory scene in 2020. We are going to see a lot happening there, both positive and negative, and probably very impactful on both ends of the spectrum. And that brings us to number 2, decentralized finance. This is an incredibly powerful trend that is only growing more powerful by the day. Financial institutions, oh man, they are in big trouble. Crypto tech is about to make banks look like VHS tapes. Banks are so they're behind the times, big time. And all of that action is happening over on Ethereum. According to DeFi Pulse, 19 of the top 20 crypto DeFi projects are built on Ethereum. The only non-Ethereum DeFi project to hit the top 20 is the Bitcoin Lightning Network, all the way down at number 8. The barriers to finance are being broken down, and the way in which financial services take place, they are in the process of being fundamentally rewritten. Taking loans with no middleman, synthetic assets and derivatives. We have seamless swaps of assets in seconds. Peer-to-peer smart contract-based lending and borrowing. Stable coins for coins all around the world, including gold. We have insurance happening as well now. The early cases, but it's happening. And look, we're just getting started. This field of application has just an exponential room to grow, with more competition coming for existing players like Maker, and of course new projects being launched for use cases really not yet even defined or catered for. Decentralized finance is going to be incredibly exciting. I think 2020 could be potentially even a watershed year for seeing these projects really taking off. Now, the key players to watch in this space are the platforms like Ethereum or Tezos, for example, as well as the applications built on top of those. Maker, Kava, Synthetics, Kyber, a whole host of others which are rising in prominence. And finally, number 1! We're number 1! Bitcoin. Yes, it's Bitcoin. Of course, it's Bitcoin. 2020 is going to be a very big year for Bitcoin. The king of crypto land will continue to show its dominance in the market, coming into the Bitcoin halving, which is likely to have a significant price impact on our good old buddy Bitcoin. There is a good possibility that we will cross the all-time high post-halving, so look for Q3 or Q4 of next year, potentially to see that new high. Not saying it's going to be the new peak. We're going to go much beyond that, but crossing back over the $20,000 mark. Of course, we have to bring in the fact that the miners are going to see that 50% daily reduction in payouts, so the small miners are also going to be put under pressure. But the market effects, while likely not immediate, will certainly take their toll over time. Well, the price of Bitcoin before and after the halving, I mean, honestly, it's really anyone's guess what's going to happen specifically. But the one thing that is certain is that we are all going to be talking about the Bitcoin halving a whole heck of a lot next year. It's going to be a major topic of conversation and of speculation. And of course, these are only my opinions about the key trends coming up for 2020. I want to know, what do you think? Do you agree with my list? What are the top trends that you are watching for 2020 and why? Hit me up down below in the comment section. As always, I'm super interested to know what your opinion is, so please let me know. And if you did enjoy the video, hit that thumbs up button. Yeah, and subscribe to the channel if you're new around here as well, guys. You guys frickin' rock. I hope you have an awesome weekend. Long live the blockchain. And peace out till next time.